Good evening, everybody. This is Stefan Beltay from TradingCandles.com. It's June 5th, 2014. Start with our normal disclaimer. We are not financial brokers, dealers, or advisors. We suggest that you use your own due diligence when researching and investing in any type of financial instrument. All the materials presented here are for educational purposes only. And on that note, we thank you for attending. And up here on the screen, we're just going to start right in with some charts tonight. We're going to go through pretty fast. If you have any questions, go to tradingcandles.com. Send me an email, and I will get back to you. So as we look at today, we can see that the S&P 500, the Dow Jones Industrials, and the NASDAQ have all broken to new highs, all-time highs. Incredible. And we have seen that the Russell 2000, the small caps, this is the more risky stocks, broke out of this descending triangle, came back, had a nice up day, 2% compared to the other indices, which were about 0.6%. Now, one thing to note here is you'll see I have this little 10% drawn above the S&P 500. I'm going to go ahead and change the chart style here. Give us a little bit more room. And let's pull up the So actually I'm going to make this a little bit of a longer chart even. Get a little bit of history behind us. So you can see 10% here. What I am doing is looking at this orange line, which is the 125-day moving average. Interesting enough, it follows this primary trend line I physically have drawn in. People often refer to moving averages as moving trend lines, and in this case, it's pretty much following it perfectly. But here we came off of it 10%. We had a little pullback. Here we were up 15%. Really didn't get much of a pullback, but we did get some sideways action. Here we're up 13%, and this was the middle of last May. So take note of that. We had that nice pullback. Came back up 12%, a nice pullback. And then we had a 10% here. A nice pullback, 11% here, another nice pullback. And here we are again at 10% above our 125-day moving average. So in technical analysis, one of the three tenets is history repeats itself. We now have 1, 2, 3, 4, 5, 6. This will be the 7th time that we've come 10% or more off of this 125-day moving average, which is being well respected. Again, when you're looking at a moving average, it is completely useless unless it's being respected. And you can see that 1, 2, 3, 4, 5, 6 times we have bounced off this 125-day moving average. So that moving average is being well respected. So it would not be out of the question to have a pullback into this trend line here, or even all the way down to this area. 1880 or 180, this is the SPY. So this is the proxy for the S&P 500. So this is 10% of the S&P 500. So technically the S&P 500 right now is at 1944. Sometimes it's just easier to use this as a proxy. So it would not be inconceivable for this to pull back anywhere between 190 and 185, and that would be healthy, and we would come back into this area of congestion you can see in here. So definitely would not be a surprise come in there and hit this area of congestion. Pullbacks are healthy. It's, like a marathon runner running up the hill. You you've got to take a breath once in a while. So this is one of those things that's just, again, something to pay attention to. Always trade the chart you're looking at, but use any underlying evidence you can find. And just on a quick side note of economic interest, the European Central Bank decided it was going to lower their interest rates, actually make them negative, which means that the banks literally have to pay the government for money sitting in their bank. Basically, in simple terms, and I'll maybe get into this into another video, but as our country does, to stimulate the economy, we put more money in the economy. So the ECB will sell bonds to some of the larger banks, and this is kind of a quid pro quo. They have to sell them back when it's time to. So anyway, the ECB basically gives this money to the banks, and normally you'll get a small interest on it. Like here in the U.S., we're getting 0.25% interest. Well, in this case, they're giving money to the banks, or making them take the money, and then making them pay the interest on it. Basically, what that does is it forces the banks to have to do something with that money. Here in this country, when we had the bailout, a lot of those banks just sat on the money, said, hey, I'm getting a 0.25% interest, and I don't have to take any risk, and so we're just going to hang out until we see what happens. So what they're trying to do, and other countries have done this, Japan, and so it's not the first time, but they're trying to force the banks to push the money out. Now, what's interesting also is that the European Union has an account balance, which basically is the opposite of us. So our economy has a deficit. Here in the U.S., I am quite sure we all know about our giant deficit. Well, the European Union has a balance. They have a positive on their balance sheet. But most of that comes from Germany. Germany is the powerhouse over there. Spain has a deficit. Many of the other countries have a deficit. The Europeans have been trying to get Germany to help stimulate the European economy by buying, more goods and services and things of that nature. Germany's pretty much been, fighting it along the way. So I guess the central bank felt like they had no other choice than to do this. Although their economy seems to be doing well, I don't know the details, obviously, but something to watch. We may get into this later, but this is one of the reasons, the main reason really, that we are not really trading Forex this year. We have done well in the past. We have a few small positions, but people just keep changing their monetary policy left and right, and it affects the currencies, and you just can't keep up. It's crazy. Technical analysis really doesn't work in that situation. It's completely controlled on a whole another level. So today we closed two positions. We closed WDC, Western Digital. Had a nice up day. Again, probably wondering why I would close something that looked like that. And I think I probably could have let it run up to this old high here, another few points, and maybe I should have. I'm not sure. We still have a pretty nice MACD running up. Previously, I had said that this was kind of riding on the back of SanDisk, which is really going gangbusters and has been sitting at the top here. And I don't want to say it's overbought, but at some point it's going to have a little pullback. And what happens is the institutions are going to put their money in the leading stocks first, and they're going to run them up. And when those stocks hit what they think is a fair value, they're going to start buying the secondary stocks. So an example would be Apple. Apple's hitting highs again. People are going to tend to buy Apple, and they're going to wake up one day and realize, wow, we've really run this up, and it may not be going down, but I'm not really comfortable paying any more money for this. Let's go buy some Samsung or some other similar stock that'll probably keep running up, and so they'll run the secondary stocks up. And when they start running the secondary stocks up, you want to pay attention to that. You can get nice returns on those trades. But that's basically what happens, and so that's going to start to be a shift sometimes in the sector, and foretelling of it. And not that it's a bad sector to be in, it just may stall your money for a while. So WDC still had a decent looking chart. I've just been holding it for a while. We picked up about 1.5%, so not a huge return, but it's money in the bank, and money in the bank is always a good thing. The second stock we sold today is POL, and we actually looked at this stock yesterday, and again, I really don't know what they do. I think they make some kind of polymers and chemical substances. So I have my $50 price target here, fundamental. Now we have the MACD has come as high as it's ever been in this really nice run we've had here. So again, I like to sell into strength under these conditions. We bought this at $37.90, and unfortunately I can't read my writing, but looks like we sold it at $41.92 today. So we picked up 10.5% on this trade, which is not bad for a stock that moves sideways quite a bit. And again, fundamentally, I see 50, and it may go straight up from here, or it may pull back. The chances are, if we get a pullback into this 40 area, we'll just get right back into it. But we like to hit singles and put a little bit of money in the bank, and that's just the way we trade. Now we've added to 3 positions today. The first being TMO, Thermo Fisher. I believe they make some kind of scientific equipment. I'm not sure if it's microscopes or exactly what they make, but get a nice chart here. It had a pretty long pullback. MACD is breaking the 0 line. We get a break above the 50-day moving average. So it seems like a good time to add to me, and we can go ahead and look at a 2-year chart just to see how the trend looks on a 2-year basis. Let's get the 2-year basis going here. Sorry about that. So beautiful trend, 2 years, weekly candles again. We have a fundamental price target at 175. We have this beautiful pullback here, this little flag, a bull flag they'd call that, and a little bounce up, breaking above even the 10-week moving average, which stayed above most of its last 2 years. So a run back up here to its highs, and if it can break those highs, I think we could see probably we probably easily see 140 on a breakout of this. And speaking of breakouts, we're probably going to start to see a lot of breakouts because the market itself is broken out. And I'll just pull up BDX here. So we traded this stock, and we hopped out here, and now it's come back, and it's coming up again, and it's looking to pretty much have made another breakout. And that breakout is going to have a pretty small target. So, this is more of a swing trader's game. You're looking at about 121-ish on a target for that. But if you actually took a longer target, took this as the breakout, go ahead and just run this because we actually ourselves may get back into this trade. So I'd like to know myself, I would probably be looking right up in that area here. This is just target 1. There'd be another target beyond that. But yeah, so 121.84. If we hold this level here, is going to be our next target up there. And I see no reason why we shouldn't hit that. And just out of curiosity, let's go ahead and look at the 2-year on this chart. And we have another beautiful 2-year chart. You can see the breakout happening here. When I'm doing these more trend trades, I like to have this 2-year chart supporting my moves. And by trend trade is if we get into this, we might be in here for weeks, months. So the more power you have behind the whole trend, the more chance you have of making it. If I'm looking at a 3 or 5 day trade, then no big deal on that as much. It helps, but it's not as critical. And another breakout today, so we added to Disney today. So again, we own TMO, which was having a bounce trade. We own Disney, and we added shares to it today. Let me go ahead and draw this line out here a little further. Get that out here. So this is pretty much a full breakout. We've had an open and close. Let's zoom in a little bit here. We've had an open and close and an open and close above it. Actually several of them. MACD's floating around it. It's possible it could fall back into this channel. It's a good stock, and 87 is a pretty good target. We have a $90 fundamental target on it. And again, to repeat myself, and repeating myself usually should help you learn. Most stocks that go over $90 will go to 100. So we're in this for the long term. And again, as for that, let's go ahead and look at a 2-year chart of Disney. And here's another great chart. There's been no exit signals here at all for the last 2 years. And it's gone from 44-ish to 84. So about we're talking a 40% a year return on a major stock. Disney, it was a major stock. I don't think Disney is going anywhere. So happy trading on that one. And see, the last one we added to today was BHI. Now this stock tends to do a lot of sideways drifting. But as you can see here, it's had pops on its earnings both times, and it's kind of just rolling sideways. So with the market going up, I feel there's a little bit more upward pressure on this stock. And if it pulls back, it's not very volatile, and we will be willing to add even more to this position. As you can see here, let me shrink this in a little bit for us. So in technical trading, for those of you who aren't familiar, this is called a gap. We closed here, and in the morning, earnings came out, we gapped and opened here. Now, people say that all gaps have to be filled. So it wouldn't be unusual for this to pull back down into the 66 area to fill that gap. You know, and there are really like 7 or 8 different kinds of gaps. There's breakaway gaps and common gaps and exhaustion gaps. So not every gap has to fill its window. This is called, Japanese call this a window, an open window. And when it fills it, then they say the window has been closed. So we like this stock, and we will keep adding to it as we see fit. Now we opened 3 new stocks. We'll go over those, and then we'll just call it a night. So APH. I have no idea what this stock does, and most of the time you'll only hear a technical trader say that. I think I have traded this in the past. Get the MACD rolling up. We are in the 90s, so 100 is definitely within reach there. Even though that may only be a 5% return, that can happen pretty quickly. And if we look at this on a 2-year chart, beautiful. You know, just beautiful. We had some volatility back here actually about a year ago. Over the summer, it looks like it had some nice volatility in there, but it never broke. So we took a position in that and see what happens, but I'm pretty sure we're going to get up to 100 on that. So we took a position in St. Jude Medical today. We've been in and out of this before. I'm sure you've seen the commercials on TV. They have little children, do a lot of cancer research. Medical devices have been doing quite well if you look at the ETF for medical devices. Healthcare itself has been doing mediocre. This is a very low volatile stock, low volatility. It's only gone up 20% in the last 9 months. Go ahead and take a look at a 2-year chart. And you can see how flat it has been. So what we like about this is the fundamentals are good on this stock. It's had a good period of consolidation. The sectors themselves are doing okay. And a run back up to the top here wouldn't be out of the question, and that's a good 5% run right there. And don't poo-poo 5%, because if you make 5% on your money, a lot of people think, hey, I can get a CD and have no risk, and I can get 3% if I hold it for a year. That may be true. However, you may have some risk here. We're limiting it. But if you get 5% in 60 days, and you're able to repeat that just 5 times in a year or 4 times in a year, you're actually getting a 20% return on your money, not a 3% return. So you're risking the same amount of money, but you're getting 6 to 10 times the return. Again, that's a kind of a whole other discussion, but people don't really realize that these small amounts add up quite a bit. And so we'll run on to our last stock and call it a weekend. I know it's Thursday, but we usually don't post on Friday nights. PNR, Pentar, another stock. I'm not sure what this does. I do think I've traded it before. Obviously back here I've put in a PE ratio, which means that to me this had a pretty high value on it and needed to work itself into that value. And from that point you can see how it went up. It really has gone pretty sideways, which means it's working that value. So when I say working the value, we're talking about earnings, so the institutions were saying, hey, this stock is going to have a very high growth, so we're willing to run it up. But those earnings have to run up and meet their expectations to make the value of the stock worth it. So sometimes you have to let those earnings, the earnings announcements come and let the company prove that they are increasing their earnings per share. And when that happens, then, the stock value-wise becomes cheaper. The price, actual stock price might be higher, but in relationship to other stocks in the sector or industry, it is more fairly valued. And if it continues to have that large growth ratio compared to the sector or the industry, then it may make another run and outperform the sector again. So we like to hear breaking over this 50-day moving average. And let's see, did we take a look at 2-year? Here's a 2-year chart. And again, what I liked about this is we have this beautiful run. And just so you know, we do a lot of work. We do a lot of searching, hours and hours of searching to find equities that look like this, because not all charts look like this. I mean, even if you pull up the, granddaddy of Apple, I mean, that is not something I feel super comfortable trading all the time. Google's probably a little better looking, but that has a better price line, another stock I like. Anyway, back to PNR. This is just a great pullback and a great bounce trade off the 40-week moving average, which has just had a great trend. So it's a great trending stock, and really we really took this trade really because of the bounce off of this more than the daily chart. We think that supports this moving up, and even if it goes back up to its old highs, which is about 6 points, so you're talking about 8%, 7-8% in there. Again, those 7-8%, 5%, those all add up. You don't have to have the 50, 60, huge home runs. And some people trade and do. Just trade the way you're comfortable. I know people who only win 20 or 30% of the time, but they have huge wins and they make a profit at it. I'm personally not comfortable losing that frequently. So when you trade, you have to find your niche. You learn what you can do, find your niche, make your recipe, and trade it. Here we're just showing you what we do, but you can take pieces of it, pieces of other education you may get someplace else, put it together, and you'll be trading, making money before you know it, and feeling good. So anyway, thank you again. Stefan here at tradingcandles.com. Please go to the website and send us an email. Tell us what you think. I'd like your comments. Send us some stocks to review, questions you have. I'd really like to get some people involved, get a community building here and going. It's great to have contact. I have a lot of contact with other traders, and it has helped my trading tremendously. And so I'm hoping to expand that here on the web. And again, good evening, and have a good tomorrow.